If the United States ever stopped paying its debt, the world wouldn't just shake, it would stop. Banks would freeze, markets would vanish. The dollars in your wallet would suddenly turn to paper worth less than the ink that printed them. Because what keeps the modern world alive isn't money, it's belief. Welcome to History of Finance, where we uncover how power, debt, and history collide, and why nothing about our economy is as stable as it seems. What we call us debt isn't just a number buried in government reports. It's the invisible architecture holding up every mortgage, every paycheck, every global market. If that structure ever failed, the result wouldn't be an American crisis. It would be a worldwide collapse of faith. Before we imagine that fall, we have to understand how the world's richest nation became the world's biggest borrower and why the system depends on keeping it that way. It all began in 1790, when a young United States was drowning in war debt. Most nations would have defaulted. But the new Treasury Secretary, Alexander Hamilton, had a different vision. He didn't see debt as a curse, he saw it as a tool. If America could borrow, pay reliably, and earn trust, it could turn its obligations into its greatest source of power. And so it did. The government began issuing bonds, promises to pay, and kept those promises. Investors bought in, confidence grew. Soon, American debt was considered safer than gold itself. The United States had found a secret weapon: faith. It financed its growth not with treasure, but with trust. From railroads to factories, from wars to space exploration, every major leap was built on borrowed money. Debt became the engine of expansion, not a weakness, but a sign of ambition. And by the mid-20th century, that engine powered the world. In 1944, as World War II raged, 44 nations gathered in Bretton Woods to design a new global financial system. Their decision changed everything. They anchored the world's economy to the US dollar and the dollar to gold. That meant every major currency depended on one promise: America's. The dollar became the bloodstream of global trade, and US debt became the world's savings account. But faith, like gold, is finite. By the late 1960s, the United States was spending heavily on the Vietnam War and massive domestic programs. Dollars were leaving the country faster than gold could back them. Other nations started demanding metal instead of paper. And by 1971, President Richard Nixon made a fateful choice. He severed the link between the dollar and gold. Money was no longer tied to anything physical. Its value depended on confidence, on trust in the American government's promise to always pay. And with that one act, a new era was born: the debt standard. Gold no longer backed the dollar. The world's faith in U.S. treasuries did. From that day forward, America could create infinite credit as long as the world kept believing. Treasury bonds became the foundation of global finance, the collateral every bank, pension, and government relied upon. Debt was no longer something to escape. It was the system itself. When you hear about the national debt, you're not hearing about a bill waiting to be paid. You're hearing about the foundation of the modern financial world, the structure beneath every interest rate and every loan. The system depends on one simple ritual. When old bonds expire, new ones are created. The United States doesn't truly repay its debt, it just rolls it forward forever. As long as that cycle continues, the illusion of stability remains. But if that chain ever broke, even once, the illusion would shatter. Treasury bonds are the bedrock of global trust. Single missed payment could send shockwaves through every market on Earth. Banks would stop lending. Currencies would fall. The risk-free asset that anchors the global economy would no longer be risk-free. It's happened in small ways before. In 1979, a minor delay in Treasury payments caused interest rates to spike and markets to panic. In 2011, Congress nearly failed to raise the debt ceiling, and the U.S. credit rating was downgraded for the first time in history. Trillions vanished in days, not because of failure, but because of fear. Those moments weren't financial breakdowns, they were psychological earthquakes. Because the world economy is built on one belief: that America always pays. That assumption turned debt into America's greatest export. Other nations trade goods, America trades promises. Each bond it issues becomes part of another country's reserves, another bank's stability, another pension's safety. And that's the paradox. The United States doesn't need to eliminate its debt, it needs to maintain it. The world demands those bonds. Washington ever tried to pay them all off, the system would collapse under its own design. Debt isn't a flaw of the machine, it is the machine. But even the strongest faith can crack. In 2025, U.S. debt surpassed $38 trillion. The government now pays nearly $1 trillion a year just in interest, almost equal to its defense spending. It borrows money to pay for money it already owes. System still functions, but the hum of confidence has turned into a groan. Meanwhile, politics has turned the debt ceiling into a weapon. Each time Congress threatens default, investors flinch. Foreign nations like China, Japan, and Saudi Arabia quietly sell off U.S. bonds. Central banks begin buying gold again. Countries from India to Brazil start exploring trade systems that no longer depend on the dollar. For the first time in half a century, the world's faith in us debt is beginning to fade, not because America lacks money, but because it lacks unity. Because when your system runs on belief, politics becomes the true risk. If America ever failed to pay, even for a day, the collapse wouldn't start with riots. It would start with silence. Trading screens would flicker. Algorithms would freeze. And deep inside the world's financial networks, the unthinkable would become real. The safest asset would no longer be safe. Within hours, global markets would freeze. Banks would stop lending. Investors would flee to gold, euros, or even crypto. Anything that looks like certainty. The dollar would fall. Interest rates would soar. Mortgages, car loans, and credit cards would become unaffordable overnight. Within a week, the government couldn't pay soldiers, pensions, or health care. And within 2, the global economy would cease entirely.
What?
But the real story isn't about numbers. It's about trust. Because the United States doesn't just print money, it prints belief. And once that belief breaks, there isn't a central bank on earth big enough to repair it. Every empire has faced this moment. Rome had its denarius, Britain had its pound, and both learned the same truth. Currency survives only as long as people believe in the empire behind it. When that belief fades, even the strongest metal turns to dust. In America's case, collapse wouldn't come through war or invasion, it would come through indifference. Through quiet withdrawals, shrinking investments, and new systems built elsewhere. China wouldn't replace the dollar overnight. No one could. Instead, the world would drift into uncertainty, where every transaction costs more because no one knows what anything is truly worth. That's what default really means. Not the end of money, but the end of meaning. And here's the irony. The United States wouldn't default because it ran out of money. It would default because it ran out of cooperation. The government controls the world's printing press. It can pay any bill instantly. But when politics blocks that ability, when ideology outweighs reason, the result is the same as bankruptcy. Confidence doesn't care why the check bounced, only that it did. Each political standoff leaves scars. Every delay, every downgrade, every argument over the debt ceiling chips away at the story the world once believed, that America's system would outlast every storm. Faith doesn't collapse all at once. It erodes, slowly, quietly. And one day, the world may simply move on, not with anger, but with caution. That's how empires end now. Not with invasions, not with explosions, but with indifference. The world stops needing what once seemed eternal. The greatest danger to the United States isn't the size of its debt, it's the erosion of its credibility. Because once investors, nations, and people begin to doubt, the very debt that built its empire becomes its weakness. The United States built its dominance on a paradox, infinite debt backed by infinite trust. And for now, that trust still holds. But faith, like any currency, loses value when it's overused. If the day ever comes when America truly cannot pay, whether through politics or collapse, it won't just default on creditors. It will default on history itself. Because the truth is terrifyingly simple. The world doesn't run on money. It runs on trust. And trust is the one currency no nation can ever print. This is History of Finance, where we uncover the hidden forces that built our world, and the debts history never forgets. If this gave you a new perspective, subscribe, because history always comes collecting.